Good afternoon, everybody. It's a great honor to be here, and this session, I'm so glad to be with all the giants here, and we will try and discuss the issues in China. And I think if you look back into internet finance, today the topic may be on FinTech, but internet finance has got slightly different meaning from FinTech, and perhaps the giants could tell us the slight difference between that. From our own observation over the last few years, is that internet finance has always got a social element in the finance and technology. And most of the giants that we are seeing today, which is sitting here, they have a very clear social objectives when they are employing the technology. And what we are seeing in the market at this moment, in terms of finance, is that a lot of fundraising in the stock market are focusing on the tech companies. And not too long ago, we have seen Zhong'an Insurance doing the IPO, raising about US $1.5 billion, and over the last 12 months to 18 months, most of the large fundraising were done in the FinTech area or the internet finance area from China. And that is something that a lot of us are following and really wanting to find out more where the future is. And today I have with me three experts in the area, and they have been in the industry for a long time. On my right is Mr. Tang Ning, the founder and chief executive officer of CreditEase. Next to him is Mr. Douglas Feagin, president international business of Ant Financial, and on my extreme right is host Htite, co-founder of Dianrong. Welcome, three of you.
Thank you.
So glad to be on the same stage as with three of you. Let me start with Mr. Tang Ning. Your company CreditEase is the largest marketplace lender in the world. Founded in only 2006 and it's grew tremendously. And you're into 250 cities and 100 rural areas. And a few people know that you are actually a wealth manager outside China. But in China, you have 3,000 wealth professionals across 40 cities. And recently, we have launched a 1 billion FinTech fund.
That's great advertising, Professor. Thank you.
Yeah, and I think you have listed your Htite in last year, December. So my question is to you is that Singapore is a very interesting place, and you have actually started something in Singapore. Is there any reason that you're doing that?
Yeah, I mean, Singapore is really our lucky city, because that's where we found the leader for our FinTech investment fund for global FinTech investment. Yeah, my colleague Andrew, who's sitting in the audience front row, supposedly taking picture for me. And she used to work in Singapore a long time in banking. Yeah, we met, and I was able to convince her that FinTech and FinTech investment in particular would be for the future. And now she and her team have become the most active FinTech investor in the US. I'm sorry to say that, not for Southeast Asia. Yeah, we would like to be active in this region in the near future. Yeah, as a matter of fact, yesterday we had some afternoon meetings with investment banking and entrepreneurs from India. So we are quite keen to do more things in this region. But our global FinTech investment is very comprehensive, from early stage to late stage in every category within FinTech. And we are very entrepreneur friendly and can add a lot of value. As Professor Lee introduced, CreditEase has been around for 11 years, and we are in inclusive finance, in online lending, in wealth management. So we also have a subsidiary company listed on the New York Stock Exchange. That's the first FinTech IPO from China. So we can offer our partner companies, our portfolio companies, a lot of help. Yeah, So great to be here, and I've spent a lot of time around looking at all the exciting companies, particularly those that can potentially disrupt us. But now I see you, we'd love to work together, to avoid being disrupted. Thank you.
So Douglas, I know Ant Financial needs no introduction and no advertisement needed. You have expanded into many countries, including Thailand, Korea. You have bought into Paytm. You are doing a deal in America. You're moving all over. Now, all my Chinese friends in Singapore, they go on the taxi, they can pay by Alipay. So what are your plans for Singapore?
Well, thank you very much. It's a great opportunity to be here in Singapore. I'm excited to see this event being hosted in Singapore because we see it as a very attractive market. For us, Singapore started as a destination for the Chinese tourists who use Alipay and who want to come here and to use one of the most convenient forms of payment that they know across Singapore. And so now we have tens of thousands of merchants who accept Alipay all around Singapore. And these range, as you mentioned, Professor, from the taxis, where we're now accepted in the taxis in Singapore, to large merchants like duty-free stores and clothing stores, to even the very small merchants. So when you go into the markets and you find a local noodle store, increasingly you'll see them accept Alipay. And this can be done because we use a very simple QR code for payment. So a small merchant can just print out a QR code, open an account, and then they can start to accept payment. So we see it as a very attractive growth market for the Chinese tourist volume, and that's the start for us here. It's also a regional hub because we see a great talent base here in Singapore with people who are innovative, who know the market very well, and can drive our business. And so in building our presence in Southeast Asia, we established Singapore as a hub to do that, and all the investments we've made in Thailand, Indonesia, in Philippines, etc., are being driven by a team here with the engineering and product folks and the business development folks out of Singapore.
And what sort of joint venture that you're doing? You've done the Hong Kong Pay with Hutchinson and so on. Are you looking for more joint venture in this part of the world?
We're continuing to expand on the ones that we've done so far in Southeast Asia are True Money in Thailand, in Indonesia, in the Philippines with GCash, in Malaysia with Touch and Go, and then, as you mentioned, in Hong Kong with Chung Kong. And so we're looking to kind of continue to expand those and evaluate them. But those are all actually pretty early stage. So there's a lot of work to do to build these after announcement. And so we're headlong into the operational work to encourage more users to participate as part of these local payment solutions and to connect them to merchants in these countries.
That's great. And so I think you're one of the companies that a lot of people want to invest in. And earlier this year, you raised $220 million US, Series D, and your investors include, investors like GIC and a lot more of the blue chip company that people are looking for. Previously, you raised some funds, about $207 million in 2015 with StanChart and so on. So what are you doing? What in this part of the world? What about Singapore? What are you expanding in this part of the world?
Yeah, pleasure to be here. We really look at our business as how technology can really affect or change in a positive way finance industry. But if you go back 30 years ago, technology has been helping banks and insurance companies for all this time. So what happened in the last few years that's made FinTech more popular? Well, there was a conversation between finance and technology where technology told finance, look, it's time for a new business model. There are a lot of people that are left out. There is a lot of talk about financial inclusion, but really it's not happening. It's time to change the infrastructure that we have to include more people. So I wouldn't say that's what we did when we created Lending Club, because in the US, the service level was already acceptable. So we came in and we made it a little bit better. But in China, what makes China very interesting is that we are able to create infrastructure that did not exist before. I will make the point, just like Alibaba itself. The difference between Alibaba and Amazon is Amazon had access to logistics companies to deliver things, payment services, but Jack Ma and your team had to build all these pieces before they can do Taobao. So we feel that in emerging markets, the interesting part that we are doing is we are building technology that is part of the infrastructure, whether we're talking about risk management in credit, whether we're talking about how to take an SME that does not have a collateral and extend a loan to them based on their data, how to create incentives for people to pay back and why they should pay back. So that's really what makes the story for FinTech in China very interesting. Now, if you ask, what can we do in Singapore? Well, to be honest, we cannot do what we do in China in Singapore. China has 1.4 billion people. You have 5 million people in Singapore. But every market, whether it's the US or Europe or Taiwan or China, has to look at what they are good at and how to bring FinTech into it. Singapore is known for being the center of trust in Southeast Asia. And that is an element that is very important in finance. So you can leverage on that to probably create the world first global FinTech platform that can connect multiple countries. But if you just focus on Singapore itself, your project will be, by definition, smaller in scale.
Yeah, that's very interesting. And I think I heard a lot about the so-called technology strategy as well from each of our company. And in China, they always talk about ABCD technology strategy, A for AI, B for blockchain, C for cloud, D for data technology. So in your view, Mr. Tang, what do you think about all this data technology?
Yeah, actually, in our 11 years of financial innovation, we never had this technology first point of view. We have this consumer need first point of view. Basically, we start with unmet, unfulfilled consumer and small business need. And then we ask ourselves, is there new technology that we can use? Is there a new business model that we can develop to fulfill that need? Luckily, China has huge demand in terms of high quality financial services. For example, our credit infrastructure is not well established. So small businesses, 60, 70 million of them, and consumers and the rural people don't have good access to credit. So we have a great opportunity there. And another example is on the wealth management side. People in the US, like you ask some senior people, some young people, many of them understand the concept of asset allocation, of long-term investment. But these are pretty new terms to Chinese investors. So we also have a huge opportunity there. So then we ask ourselves, what kind of technologies are there, the ones you just outlined? And how can we really utilize them to build new business models, to do better investor education, to do better risk analytics, to do better KYC, to fulfill those needs? I think this has been our innovation thought process. And also, we look at people's future needs, not necessarily their current needs, because things really change very fast. If you look at people's current needs, like they may not know what they really need. For example, in financial services, in wealth management, for example, you ask people like what you look for today. And the Chinese investors will ask you for more high-yielding fixed income products guaranteed by the government or some kind of like internet finance companies. You simply don't have that, in the future. So you need to look ahead. You ask yourselves, what people really need 5 years down the road, 10 years down the road, they even don't know themselves. You as entrepreneur, you as an innovative organization have to see that. And then you ask yourselves and your team members, where can we find technology, new business model to fulfill such future needs? And then it comes time to do great customer education, market education. I think that is what we've learned in past 11 years.
Yeah, that's interesting to look into the future. And I think when I visited Ant Financial, I saw all the young people queuing up to take the lift up to their offices. And I found out that the average age for the company is about 31 years old. And that's something really amazing. And then you have your own technology strategy. You call it BASIC instead of ABCD, where B is for blockchain, A is for AI, S is for security, I is for IoT, and then C is for cloud. And you have invested in blockchain company as well. You know, how do you see the future evolving from your viewpoint?
Well, technology for us has been central. I think very similar to Ning, we start with the customer and say, what does the customer want? And then how can we use technology to come up with a more innovative solution and to serve that customer perhaps in a better way? And you know, I think that the use of cloud computing and data is something that we've focused on being able to scale as one of the primary capabilities of our technology system. We have the benefit of Singles Day that just happened this past weekend, which was very exciting. $25 billion transacted in 24-hour period, 1.48 billion transactions that took place on that day. Those are the exciting statistics from a kind of Alibaba perspective in terms of e-commerce. For us, though, as a payments company, we had to actually make all those transactions happen and happen smoothly. And at the peak, right after midnight, when everyone was looking for their bargain, we processed 256,000 transactions per second. So you think about the scale. That's a new world record in terms of data transaction processing. And the success rate was very, very high on those transactions. So it's a real investment in technology to fulfill those consumer needs. And we do that through investment in very large cloud computing and databases to do it. We have something called our database, which is a distributed relational database to do those transactions. It can process 48 million transactions per second, or 48 million observations per second to complete that. So it's this investment in technology. Beyond that, though, there's the use of artificial intelligence, which is just one other thing I'd like to highlight. And there's a lot of talk about AI. How can it actually be implemented? Singles Day is actually a perfect example of where you have to use AI to serve the customers, because our volumes on those days are many, many-fold what they are on a normal day. And so you could not respond to customer inquiries unless you could do that on an automated basis. And we responded to 97% of the customer inquiries through a robot by knowing what they were going to ask and being able to respond to those things real time to the customers without having to involve a person at the beginning. And our customer satisfaction rate actually went up 3% in doing that. So you think about it, we actually predicted what the concern was of the customer, and we're able to share that with them in kind of an automated fashion. So it's really this use of data, use of artificial intelligence. We will use things like blockchain as we go forward in that technology to serve the customers. That'll be a key investment. for us. And I will say it's an exciting time looking at the global landscape because we now see a lot of these records being set in Asia by Chinese companies, by Asian companies, and this is an exciting change, and it's attracting a lot of talent to the industries that we all operate in, where people want to bring that kind of first-rate capability.
You also have the AR payment, the facial recognition payment. You want to say something about that as well?
Sure.
Yeah.
And, augmented reality and facial recognition for our authentication are key capabilities. We just announced several weeks ago a trial with KFC in China where we call it Smile to Pay. And so you walk into a KFC, you tap on what things you want to eat, you smile, it recognizes you and then does the payment automatically. And they hand you your chicken sandwich and you can walk out. So you think about that, it's just a fun experience, and people love that. And so, you know, that's the kind of thing that we can see becoming more and more common throughout payment transactions and commerce, and becoming more and more fun. You know, I think augmented reality will be another thing that we see, you know, with customers making the experience more fun to do the things they do every day.
Yeah, so FinTech is very interesting. There's no need, you know, just solving all this problem with AI, big data, but it's also very cool. A lot of our students are just dying to work for 3 of your companies. So that is a trend that the youngsters are looking into. And for Dianrong as well, you have looked into blockchain, you have looked at credit analysis using big data. How do you see that helping you going forward, especially in the blockchain space?
So I'd just like to add to what both distinguished panelists said, and also disagree a little bit. Technology is not a toolbox. Of course, product is important, achieving scale is important, but technology is not a toolbox. When we define the product, we go and we say, what can I use to achieve this? I think technology is really a miracle, a gift, but if you just take what you need, you will never get what you don't expect. And that's the wow factor that we look for. I'll give you an example. Blockchain, which has the potential of changing the way we do everything in finance, including payments with Alipay, as big as it is. It really has the potential of changing all of that. It did not start because somebody in a room said, oh, how am I going to do this? How am I going to do that? I need something called blockchain. It started from Bitcoin, and we discovered it. And then we said, wow, if you have technology, if you have infrastructure that can do that, it's going to solve all these risk management problems for me. So I used to be an engineer first part of my life, and I used to get specs at Oracle, and they go build it. As an engineer, we hated that. It's only when we start getting invited to the table and say, what do you know that could help us solve this problem? So really, technology today, it became part of society. You cannot split it from the product, you cannot split it from regulations, you cannot even split it from the culture itself. The moment we all go into social networks, that's it. We are part of technology today. I'm not talking about robots and where things are going into AI, but yes, we should think about that. So in that sense, we have a well-balanced team at Dianrong. We have 800 software engineers. We have 700 risk management people. We make sure that they sit next to each other. We have product managers that come up with the products and make sure everything is working. And that's what we do. We go to the office in the morning and everybody's meeting and said, oh, did you know that you can do this with technology? Oh, really? Oh, okay, maybe that's going to solve this problem. I think that's how you can really, for a lack of a better word, milk technology as much as you can.
Yeah, so I think that's very interesting. I started off by saying that there is always some social objective, helping small or medium enterprise, the underserved segment, people who has a lot more demand that's not been met. And from hearing from 3 of you about technology, it's about people, it's about how they are being organized so that you can best use the technology. It's about the organization, the mindset, and so on. And I see a lot of questions coming from the audience, which is along the same line. I think I have one here. which says that do Chinese banks feel threatened by the inroads that fintech giants are making, and how are they responding? So that's a question that I see some trend here. Would you like to comment?
So the question is about how Chinese banks and the traditional financial institutions react to fintech. Is that the question?
Yes. Do Chinese banks feel threatened by inroads that fintech giants in China are making, and what's their response so far?
Yeah, my view is that technology is for everybody. It's not just for fintech companies or internet companies. It's for everybody. It's for financial services organizations. All the time. And actually, financial services has been driven by technological advances. So my view is Chinese banks, by and large, utilize technology pretty well. Yeah. And also, I think one organization needs to understand what's the positioning of your organization. I don't expect a bank to do everything from very, very big to very, very small. I think a healthy financial system should be like all kinds of different organizations with different strength to do different things for different customer segments, satisfying different customer needs. So fintech companies can be very complementary to existing financial services institutions. So that's one way to do fintech. You can do some things that traditional financial institutions haven't done or haven't done well. Or you become a technology enabler for existing financial institutions. So one way is being vertical. You work on things that financial services institutions, banks haven't done before. Or you help banks become more efficient. So either way, I think a fintech company has a very good future. And for banking, right, for banks, I think it's very important that bankers have a very clear strategic idea about how to work with fintech companies. I always have this question: who owns the customer? If you work with a fintech company and the fintech company tells you it's a co-owned relationship, I'm not so sure about that. Or will bankers be happy about being the so-called dumb pipe? So I think when it comes to having a partnership with fintech companies, this customer relationship issue is really key. Yeah.
I think that's very interesting. Possibly the question was directed at you, Douglas, because when Ant Financial launched the Yuepao, you garnered quite a lot of deposits from the banks, and I suppose the banks has responded in some ways with a lot of online products as well. So I think, where do you see it going forward in terms of collaboration with the banks, or the fintech companies has their own direction? Are you servicing the same group of customer, or is it that internet finance company are moving to encroach into their area of the customers? Where do you see that kind of dynamics between the fintech companies and the banks?
Yeah, well, by way of background, I ran the financial institutions group at Goldman Sachs for 22 years, covering banks were my primary customer. I think there are a lot of things that banks do today that fintech companies are not ever going to be able to do. When you look at, just look at deposits. Insured deposits are the reign of banks in most countries around the world. And I think that position will probably continue to be the case. In lending, banks are scaled to be able to do larger scale lending. both to consumers. You think about a lot of the large-scale lending and mortgages and other products like that, but most importantly, big corporate lending. The banks are doing those types of activities. And they do have a scale to reach customers in terms of distribution and position, which is very established and very formidable in these different markets. And so I think similar to what Ning was saying, with FinTech companies are moving in and serving customers in a different way, offering either a different product solution or serving a different customer segment in a way that can be very attractive. And so, that's a lot of what we're doing at Ant Financial with our mission of financial inclusion. We're serving a customer base that's much broader and reaches to customers who have typically been underserved by the banking system. And so that's the kind of primary focus. If you look at the average size of our account, even in Yuebao, the average size of account is quite small in terms of the RMB per customer. And our lending type businesses, you look at our SME lending, the average balance is $5,000 US. Those are the type of loans that when I was covering the Chinese banks, and I actually worked on the IPO of 3 of the 5 biggest banks, they said loans below 50,000 were things they didn't want to do because they're not scaled to do them. So this is really kind of serving a different customer segment and a different type of a product with them. And I think that the dynamics around the industry are enriched for all when you have healthy competition. And one of the great things that China did going back to 2004 and 5 was start to open up the financial services sector to initially investment, where many international companies invested in the banks. There was openness to open up the financial services sector, which led to the creation of some of these businesses here. And we see a new evolution of that just in the last several weeks in some of the announcements of openness. And that kind of opening, albeit gradual opening to competition, is what serves to give better things for customers and more innovation for customers.
So Dianrong is different. You serve a certain segment as well. And the banks in China, a lot of them were serving the larger companies, and a lot of them are settled with bad debts. The bankruptcy law for the banks are coming. And then from June onwards, it's just not interbank payments, but inter-payment and banks, financial institution where payments company can settle directly at the central bank. So how do you see the banks so far been responded from the challenge from you, which is the question that I asked?
Right. Whether we talk about China or the rest of the world, not all banks are created equally. Just like any business, some banks are going to embrace the transformation that is happening and others won't. And the ones that won't are going to have difficulties in the future. Look, banks are very, very, very good at getting very low cost of capital because of the structure of the bank, the regulations that they have to follow, the governance and all of that. They will always be more powerful than any institution type to get very low cost of capital. Where they are weak is in running operations. And it just happens that technology companies are very good at running operations. So if you combine these two, low cost of capital and well-run operations, the end result is we will be able to extend cheap loans to consumers, to SMEs, to even large corporates. And why cheap loan is important? Because it's the #1 factor to decide for defaults. Everybody has a certain capacity when they borrow money. If the cost of that loan is high, you will end up defaulting because your means are not big enough to pay for the interest. So there is a mathematical equation. The cost of the loan is the cost of capital plus the default plus the cost of post-loan management, operation risk management. If you add all that up and if you use technology and reduce the cost of each and every category, then you're going to end up with a good formula for your business. Some banks are doing it, some banks are not doing it. Now, in China, there are 2 types of banks. There are the super large banks and there are the city commercial banks. In Dianrong, we have a division called Banking Solutions. And what we do is we go work with the small size banks and we give them our technology and we help them to improve the service that they do with their customers. We also do it with the large institutions that need a financial service to serve their customers. So that's a perfect example of someone who has cheap cost of capital but lacks operations and technology.
Right. So the cost of capital is important. I see a trend in some of these questions that are being sent over here. I'm going to rephrase all of it into perhaps one question, is that some of the people feel that the regulation for the internet finance company is tightening up in China. And a lot of question here is asking that all of you are expanding overseas, you know, what sort of strategy are you using going forward? How different it is in China that contributed to your success? Will those success factors be repeated, say, in the whole of ASEAN, which is so different in terms of the regulation, each of them? Do you have any, you know, strategy in your mind going when, the first question is that, is there real tightening of regulation in China for internet finance company, and how are you going to go ahead in your expansion plan?
Yeah, I think the FinTech sector, or in China, is called Internet of Finance. Yeah, that's the only place where it's called Internet of Finance. But now the term FinTech gets used more and more common. Yeah, is undergoing a tightening process, which in my view is good. It's helpful. So coming decade, I think the FinTech sector will be more organized, more clean, yeah, more healthy, for real innovators to make a difference. And so the way I look at FinTech development, there's some similarity between China and the US, which is two sectors, payment and marketplace lending. These two subsectors within FinTech have reached a certain level of maturity, meaning like they've been around for over 10 years. They've each become like a $1 trillion industry. There are world-leading companies as role models, and there are also regulatory framework in place for payment, for marketplace lending. But in the coming decade, other parts, subsectors within FinTech, serving different kinds of consumer and small business needs, will continue to innovate and develop, like robo-advisor, digital wealth management, like insurance tech, like crowdfunding, like reg tech, so on, including applications based on blockchain technology. So they will do well and become more and more mature. So that's how I look at China's FinTech tightening for the time being, and also future 10, 20 years. It's going to be a better marketplace in China. Regarding our expansion, global expansion strategy, as I mentioned, we rely on the entrepreneur partners. Our FinTech fund invests to do well in each market. Yeah, so in the US, we've done close to 20 investments in payment, in lending, in digital wealth management, insurance tech, like a B2B, like infrastructure play, so on. So in pretty much all FinTech subsectors. So these are amazing entrepreneurs, amazing companies. We really enjoy working with them, and we can add a lot of value. And we are going through the learning curve for Southeast Asia, for this region. And so far, so good. So we'd like to be very active in this region, but we will work closely with entrepreneurs who can do very well in each market, in each category. We will be a value-adding partner but the driver is the entrepreneur.
Thank you. Douglas.
Sure. I think regulation is indeed tightening if you look at the pace of regulation and where it's going. And I think that's exactly where it should be. You look at the adaptation of the market, the changes within the market, be it in payments, be it in lending or in money management and insurance. These are all, the pace of change is increasing and the trends are changing. And so the regulators are moving contemporaneously with the markets. And in some ways, they have to catch up because there are new innovations that are introduced that are unexpected. And so the regulation needs to move with that. But this regulation is key to having a sound system in terms of financial services, having equal opportunity for companies within the markets, and at the end of the day, serving the consumer in the best way possible. And so the changes we see in regulation are taking account of what's happening in the marketplace. So the greater use of data, the greater use of new technologies, and the introduction of new products. And so I think we'll continue to see that happen. As to the question on international expansion, our focus has been looking at the international markets to go to the core of the customers we think we serve best in China, which are those kind of low to middle income customers that fit with our mission of financial inclusion. And so that's why we've announced the partnerships here in Southeast Asia, in the countries I mentioned before, Thailand, Indonesia, Philippines, Malaysia, and the like. We see a big need to meet the needs of these consumers with a very similar product to what we have in China. Importantly, though, we think the right way to do that is to work with local partners. And so what you've seen us do is take a stake in companies, but it'd be a minority stake, and let the local entrepreneur drive that business and drive the right solution for the people in that market. And we think they will come up with the best solutions, the best products, and work most closely with the local regulators to build the right businesses in those markets.
So?
Innovation is not only a technology or product, it's also regulations. Finance and regulations will always be together. I find it sometimes funny when some investors that they are interested in investing in fintech companies, they say, we want to wait until regulations is set, and then we want to invest. That will never happen, because if that is set, it means that the fintech companies are not coming up with new ideas. Every time you come with a new idea, you have to run it through regulations. But the most important thing is all of us, including the regulators, are going towards the same goal. We want to create a better market, we want to create better products, and I think the regulators today realize the value of fintech as an industry. Remember, in China, we have a big shadow banking, and you could try to make them sunlight banking by asking them to start reporting to the credit bureau, but it will kill them because they are not equipped to take all their data and send it on a daily basis or a weekly basis to the credit bureau. We'll be happy to do it every hour if they want. So the relationship with regulations and finance will always be there. Now, if you have a traditional business and you have 10,000 employees and there are changes in regulations, it's going to cost you a lot to adjust to it. If you are a technology company and there are changes in regulations, you can adjust very quickly by just changing your systems and servers. And that's the beauty of having a fintech company. We can respect the regulations much faster, much quicker than a traditional service. On your second question about expansion outside of China, to be honest with you, we looked at it multiple times. And we realized where in the world you're going to find an economy that is growing at the rate it's growing, where in the world you're going to find a regulatory system that is mature. I think China is big, and I think the opportunity is big. We're not the size of Ali So at this point for us, most important thing is to focus and making sure we continue to grow as we've been growing for the last few years.
Yes. I have the last question. We're running out of time, but payments in China started off in 2004, and P2P lending 2006, and you're way ahead of Singapore in many of this because your market is big. You have a lot of first mover advantage. In 2 sentences, how could Singapore take advantage of this FinTech revolution? Tang.
Actually, Singapore and China are very, very different. And this morning, I listened to Managing Director Manon's speech. It's very impressive. I think Singapore has figured out the differentiation strategy. Yeah, how to make it unique, make it very different. And the several key positions, strategies he outlined, are very clear. I think if we just follow them, Singapore will be a very vibrant FinTech hub with a lot of unique values. People like FinTech companies, entrepreneurs, investors like us, and other stakeholders can enjoy. So I'm very hopeful that Singapore FinTech will do very well.
Thank you. That is very good.
I'd say 2 things. One, capitalize on its location as the center of Southeast Asia. This is a geographic region with over 600 million people, some of the highest GDP growth in the world, and a region that I think has the chance to really vault in terms of its economic progress over the next 5 to 10 years. And Singapore is at the center of that as a commerce hub, as an innovation hub, as an idea hub in this region where many of the leaders come here and interact, participate, and change business. And I think businesses like ours are going to want to be here if it's seen as that center. The second thing I'd say is, focus on education and the young people. This is where all the ideas are coming from. And Singapore has a great education system and some amazing talents in its young people here. And I think all of us as interesting companies and innovative companies are looking for those new ideas and those people with those ideas. And so fostering that culture of change and innovation in the university system and with the young people will really create a lot of opportunity.
You have just given some homework to the professor.
So I'll probably repeat what I said early on. You have a big handicap in Singapore, which is very small population. You can never be the size of China or the size of the US. And you need that market for FinTech to be vibrant. But at the same time, you can make the world your whole market. So it's no coincidence that some of the large international private banks are set up here in Singapore. Majority of their business is not with Singaporeans. Majority of their business is with countries around them. So I think if regulators in China have challenges to deal with the local laws and the local society, regulators in Singapore have to come up with sophisticated models on how to deal with business coming from outside of Singapore and how do you make it happen in Singapore. Globalization is happening and it will not stop. I'm pretty sure there are people in South Korea that want to connect with people in South Africa. At the same time, they want to connect with people in France. It would be perfect if they go to Singapore and they find all of that. So the FinTech future, in my opinion, is for Singapore to really become the world capital of FinTech. I say the same thing about Switzerland or Hong Kong. These capitals are made and created to serve the rest of the world, but not the local market. You have an over-banking system in Singapore. You can use any type of payment you want in Singapore. You should look outside of Singapore.
Thank you very much. I think Singapore really welcomed 3 of you, and also the 25,000 people that are in Singapore. They give us Singaporeans in Singapore a lot of confidence that we have a great future together with all the giants from China and a lot of fintech companies in the world. We have run out of time, but let us thank our panel today, Ning from CreditEase, Douglas from Ant Financial, and So from Dianrong. Thank you very much.